Hello, and welcome back to the channel. I'm Algabot, and today we're taking a close, educational look at an expert advisor for MetaTrader 5 called Quantile Band Breakout. This is a trend-following breakout system, but with a thoughtful twist. Instead of using the usual highest high and lowest low channel, it builds a robust quantile channel from recent closing prices. By the end of this video, you'll understand how that quantile band is calculated, how a compression filter screens the setups, how the entries and exits are managed, and how the code puts it all together. Let's get started. So what does this expert advisor actually do? At its heart, Quantile Band Breakout is a breakout strategy. It watches a channel and waits for price to close decisively beyond it. What makes this approach different is how that channel is built. A classic Donchian breakout uses the highest high and the lowest low over a look-back period. The problem there is that a single spike, one long wick, can define the whole boundary. This strategy takes a more statistical view. Over a window of recent completed closing prices, it computes an upper quantile and a lower quantile, by default the 85th and 15th percentile. Those quantiles deliberately ignore the handful of outlier prints at each tail, so the channel tracks the body of the recent price distribution rather than one lone extreme. The distance between the upper and lower quantile is the channel width. And here's the second key idea. The strategy only trusts breakouts that emerge out of a compressed channel. It compares the current width against the average width over a longer look back, and if the range hasn't tightened enough, the signal is skipped. The thinking is that a coiled, narrow range often precedes a cleaner expansion, so filtering for compression aims to improve the quality of the setups it acts on. This particular expert advisor runs on a single time frame, whichever chart you attach it to, and it works on any instrument, though breakout logic like this is commonly studied on liquid forex pairs. In terms of who it suits, from an educational standpoint, it's designed for traders who are curious about systematic, rules-based trend following and who want to understand the mechanics of a statistically robust channel rather than a simple high-low box. The parameter set is deliberately small and broadly ranged to reduce the temptation of curve fitting. As always, remember that this is educational information only, not financial advice, and that all trading carries risk, including the risk of loss. Let's walk through the exact logic step by step. The expert advisor works on completed bars only. Once a bar finishes, it looks back over a window of prior closing prices, 40 by default, ending at the bar just before the one that completed. It sorts those closes and, using linear interpolation, calculates the upper quantile and the lower quantile. Importantly, the window excludes the freshly completed bar itself, so a breakout close can never pull its own channel up or down. That keeps the reference honest. The channel width is simply the upper quantile minus the lower quantile. Before acting on any signal, the strategy applies its compression filter. It averages the channel width over a longer look back, 60 bars by default, and it requires the current width to be no larger than that average multiplied by the maximum width ratio, which defaults to 1. In plain terms, the current range must be as tight as, or tighter than, its recent norm. If the channel is too wide, the setup is considered low quality and the expert advisor stands aside. Now the entry itself. The strategy detects a fresh cross. On the prior bar, the close was inside the channel, and on the just completed bar, it finished beyond a quantile. If the close breaks above the upper quantile, that signals a long. If the close breaks below the lower quantile, that signals a short. The rules are distinct and symmetric, so buying and selling are treated as mirror images of each other. Position handling is straightforward. If an opposite signal appears while a trade is open, the expert advisor closes that position and reverses, so the book always sits with the freshest breakout. If you're already aligned with the new signal, it simply holds and does nothing further. Risk is managed with the average true range. When a trade opens, the stop loss is placed at a multiple of ATR away from entry, 2 times by default, and the take profit is set at a larger multiple, 3 times by default. That gives a reward to risk shape of 3-2. Position size is a fixed lot, and every order is tagged with a magic number, so the expert advisor only manages its own trades. From there, the ATR stop and target quietly manage the exit until either level is reached or an opposite breakout flips the position. Let's read through the code the way you'd see it in MetaEditor. At the top are the inputs. Quantile period is the number of completed closes used to build the channel, 40 by default. Band probability sets the upper quantile, 0.85, so the lower quantile mirrors it at 0.15. Compression loopback and max bandwidth ratio drive the compression filter, requiring the current width to be no wider than its recent average. Then ATR period, ATR-SL multiple, and ATR-TP multiple define the average true range stop and target. Lots is the fixed size, and magic tags the positions. Next are the two signal conditions. Look at cross-up. It's true when the previous close was at or below the upper quantile, and the current close is now above it. That's a fresh break above the upper band, and it's the buy condition. Right beside it, cross-down is true when the previous close was at or above the lower quantile, and the current close is now below it. That's a fresh break below the lower band, and it's the sell condition. The two are perfect mirror images. Finally, the entry function shows both sides. When the signal is long, the expert advisor reads the ask price, sets the stop loss below entry by ATR-SL multiple times ATR, sets the take profit above entry by ATR-TP multiple times ATR, and calls trade.buy. When the signal is short, it reads the bid price, places the stop above entry, the target below, and calls trade.sell. Same structure, opposite direction. Simple, symmetric, and easy to audit. Let's walk through the chart candle by candle so you can see the logic in action. Notice the two blue lines drawn on the price. The upper line is the upper quantile band, and the lower line is the lower quantile band. Together, they form the channel the strategy watches. Look at the first several candles on the left. Price is drifting sideways in a narrow range, and the two quantile bands are running close together and nearly flat. This is exactly the compressed, coiled condition the strategy is looking for. Each close finishes comfortably inside the channel, so there's no signal yet. The expert advisor is simply waiting, measuring the width, and confirming that the range is tight relative to its recent average. Now watch the fifth candle. Price pushes up, and this candle closes clearly above the upper quantile band, when the bar before it had closed inside. That's the fresh break above the upper band that defines a long, and because the channel was compressed, the compression filter allows it. This is where the buy entry marker appears. The expert advisor reads the ask price and opens the long. At the same moment, it places a stop loss below entry at twice the average true range, and a take profit above entry at 3 times the average true range, giving that reward to risk shape of 3-2. Follow the next candle. Price continues its expansion higher, pulling the quantile bands up behind it. Momentum carries the move, and on the seventh candle price reaches the take profit target above. The take profit marker prints, and the long trade closes for a completed move. Notice how the setup made sense. A tight range, a decisive close beyond the body of the recent distribution, and then follow through in the breakout direction. After the profit is taken, watch the middle of the chart. Price stalls, rolls over, and the range begins to tighten again as the bands pinch back together. The strategy resets and waits for the next qualifying condition, staying patient rather than chasing every wiggle. Then look at the 11th candle. Price slides down, and this candle closes below the lower quantile band, when the prior bar had closed inside it. That's the mirror image condition, a fresh break below the lower band, which defines a short. The sell entry marker appears here. The expert advisor reads the bid price and opens the short, placing the stop loss above entry at twice the average true range and the take profit below entry at 3 times the average true range. From there, follow the final candles. Price extends lower, the bands trail down behind the move, and on the last candle price reaches the take profit target below. The take profit marker prints, and the short is closed. If, instead of running to target, price had broken back above the upper band, the expert advisor would have closed the short and reversed into a long, always keeping the book aligned with the freshest breakout. So across this single chart, you've seen the whole cycle. A compressed channel, a long break above the upper quantile that runs to its target, a fresh period of tightening, and then a short break below the lower quantile that runs to its target. Same rules, opposite directions, with the average true range stop and target managing every exit. Keep in mind this is an idealized illustration for learning. Real markets produce false breaks and losing trades too, which is why the compression filter and the fixed risk model matters so much. That brings us to the end of our look at Quantile Band Breakout. We covered how the strategy builds a robust quantile channel from the body of recent closes instead of raw highs and lows, how the compression filter waits for a coiled range, how a fresh close beyond the upper or lower quantile defines the long and short signals, and how the average true range sets the stop loss and take profit. We also read through the core MQL5 code and walked a full example on the chart. Remember, everything here is educational information only and not financial advice, a recommendation, or a solicitation. If you found this helpful, please like the video, subscribe for more MetaTrader 5 strategy analyses, and leave a comment with the strategy you'd like me to break down next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.